Welcome back to CEO Money. I'm Michael Yorba, Mervyn Price, here with Brent Nykoliation, Senior Vice President, Corporate Development, NextSource Materials, nextsourcematerials.com. All right, this segment, we're going to talk about graphite market today versus tomorrow. Mervyn, you've got a myriad of questions for Brent. Why don't I just back up and let you drive for a little while?
Well, one thing that interests me is that research done on the Molo Graphite project indicates it's very advanced and it claims fully de-risked. Can you explain fully de-risked and how you got to that status, please?
Yes. So again, with graphite, you have to go through a tremendous amount of metallurgical tests. And again, graphite is very unique. You have to make sure you have the proper graphite. In order to sell the graphite, you have to be able to actually process it in very large quantities. And what we did about 2 years ago was we have done the largest pilot plant of any graphite project globally. We produced 13 tons, and how we did that was we actually extracted over 200 tons of material from our deposit in Madagascar, and had it shipped in over to a very well-represented lab in Canada, one that's quite known globally for doing almost all of the graphite projects when they want to do pilot plants. These are large operations where they literally build a mini mine, and then they'll take your ore and feed it through and produce graphite. And that graphite then is evaluated and tested, and then you find out usually as a company whether your graphite is good, bad, or ugly. And one of the big key tests there is you have to do two things. One is you have to generate enough material in order to send this out, and we went further than just having it tested internally. We went and we were able to send it out to end users, and these are Fortune 500 companies, large battery companies in Japan, so the Hitachis, the Mitsubishis, very large organizations and companies in the United States and in Europe. And it came back positive across the board. So we had sent out over 13 tons of product. In some cases, companies only send out maybe 100 pounds. So from our standpoint, what we did was we de-risked the project by knowing that we have very good graphite. It was tested by end users, but also in quantities that are representative of a mine.
The problem facing every graphite project today is trying to reach production, yet it appears, Brent, that you've overcome that issue. Talk to us about that.
Well, yes. I mean, one of the things that, and it affects every single graphite project, including us, was three things really determine whether or not your project is economical, and that is the cost of the price to build your mine. That's called the CapEx. The operating costs, or i.e. the OpEx, and that's the cost of what it costs to actually produce a ton of graphite. And then the price of what a ton of graphite actually sells for, or what a customer will buy it for. So if your operating costs are as much as it costs to sell a ton of graphite, or someone's willing to purchase it, obviously you break even, and there's no point even producing your mine. So how you attract investors and attract the large customers is you have to have low operating costs. You have to be able to compete with China. And China is the lowest cost producer for graphite, bar none. Our Molo project proved that we are one of the lowest operating costs in the lowest percentile. But what people do to try and drive their operating costs down is they put in huge volumes of production. So the whole market for graphite right now is 500,000 tons a year is produced and sold. And some projects out there are trying to produce 400,000 tons, 300, 200, 100, etc. So the higher the amount, the lower your operating costs, which make your economics look attractive. Here's the problem, that truly, without affecting the market, the most that you could possibly put out there would probably be somewhere between 20 to 25,000 tons without disrupting the market. And that's based on the current demand, which is still tied very much to the traditional steel companies. The other issue is the price of graphite 2 years ago was about 50% higher than it is today. And because of the fact that it's so closely associated with steel, the price of graphite is in lockstep. So the more that countries like China and India are producing steel for infrastructure build-outs, well, then the market for graphite fluctuates. The pricing right now for the electric vehicle boom that's coming has not been built into graphite. So all the projects out there right now are using artificially high selling costs for the graphite. So when you look at that, those projects look good on paper, but until you show them to an analyst or to an actual end buyer, and they realize that these are not accurate numbers. So what we did was we completely relooked at our feasibility study and just put one out last month. And we have put out the current price for graphite is $1,000 per ton. You'll see studies where people are trying to sell it for $3,000 or $4,000 a ton, and that's not the case, and volumes that are not realistic. But we went and we put in 17,000 tons will be our annual production. We're using current graphite prices, and we came out with a CapEx, so the total cost to build the mine is $18.4 million. Most projects would be somewhere between $100 to $200 million.
Let's talk about that, because research on the Mola project in particular looks as though you've almost built a portable mine. It seems to be modular. I mean, could you explain what it is, please?
Correct. So for the listeners out there, how mines are built are very much like how you built a house. It's called stick-built. And what they do is they literally come in and they'll bring in tons of steel and rebar and cabling, etc., and basically build a mine from scratch at your mine site. And that is a very expensive, but that is how mines are usually built. And when you look at iron ore and gold and copper mines, some of these mines can be as much as $500 million to $1 billion. And a typical graphite mine can be 100 to 150 million. That's not abnormal, and that's somewhat realistic for the size that we're talking about. What we did, though, is we said, listen, in this environment with the way the price of graphite has right now come off, how do we build this mine cheaper? And we spent 18 months, and our management team assembled a very complex group of over 36 vendors, and we determined that a modular mine build philosophy is the way to do this. And it's literally like a Lego set. We are going to be constructing the mine off-site. It'll be built in containerized modules. It'll be built and then tested for a month. We'll actually run material through it. It'll be approved and checked before it's even shipped to site. So while it's being built, after it's tested, it'll be dismantled. It'll then be shipped to Madagascar, and it only takes 30 days and 30 people to assemble it. Our original estimates were 1,500 people to assemble it, and it would take over 18 to 24 months to build it. The build time for our modular mine is 9 months.
Wow.
So what that's done, obviously, is it's brought, and it shocked us as a company when we did this, to have our original cost was $188 million to produce a sizable mine, and now we've reduced that to only $18 million. And now we are shovel-ready. We are out right now raising that $18 million. And in 9 months from the point that we raise that, which we expect to have the mine built by next July, so that would roughly be a year from now, we will be the third largest mine in production of high-quality graphite in the world.
You've got to attribute that kind of innovation to the management team behind the Mola project.
Yes. So one of the things that make or break a project, and again, when people, I encourage them, they have to do their homework on graphite projects because it's a very opaque industry. And one of the things that you evaluate whether or not this is a good project is what type of graphite do you have, and then the management team. We're blessed with the fact that we have great graphite. That's nothing we could control, but certainly the management team side. So we were one of the only graphite projects globally that very early on we had a very large mine construction and design company, one of the largest in the world out of South Africa, who's African-centric. So they understand Madagascar. They've built over 200 mines, and they run over 26 mines on a daily basis. And that company is called DRA Global, and they're based in South Africa. And they took an early interest in our company. They invested into it and also did our bankable feasibility studies. So all these projects that you look out there, very few of the 120, maybe 10, actually have the documentation, the studies done that you can actually say, what are the economics of that mine? Will it make money, plus or minus 10%? And you can take those numbers to the bank. That the asset's been proven, it's been de-risked, and it has everything in there you want to read to make sure you're investing in a project that is quote-unquote real. So those studies are done by reputable companies, and ours was done by the largest engineering company in Africa. And at that time, we actually hired full-time. Our senior VP of mine operations has come from that company, DRA, and as well the managing director retired recently, and we now have him on our team. And these two individuals are obviously engineers, but they're going to be heading up our operational readiness and all of the mine operations for this modular mine. What's so intriguing is this has never been done before. Never in mining, and this is according to the large mine builders, has a mine been built fully on a modular platform. This will be a first, and if we do it, and it's a proof of concept, of course, but it'll revolutionize mining. To think that we can take a capital cost of somewhere in the mid-high 100 millions and bring it down to under 20 million has not only attracted investors, but it's attracted the engineers that have now joined our project to see this thing happen. And we have literally one of the highest quality engineers and the companies associated helping us with this mine. So that's very comforting to investors, but it's also very comforting to the customers who will be buying our graphite.
Great, Brent. We've got to wrap it up for now, but thank you so much for telling us all about your company and making this a really good show. Really appreciate you being here today.
That was fascinating. Thank you.
All right, Brent Nykoliation, Senior Vice President, Corporate Development, NextSource Materials, symbol on the Toronto Exchange, NEXT, on OTC, QB, NSRC. Please give this company a good looking over. We'll be back tomorrow with more great content for you. Thanks for listening. This is Michael Yorba and Mervyn Price on CEO Money.
Thank you for listening to CEO Money. If you would like to be a guest on our show or know someone who should be on our show, please contact us at info@wfn1.com or our website, wfn1.com. If you would like to reach any of our guests, please visit us at wfn1.com. Join us on Twitter at WFN Live or our Facebook page at WFN Live. We will be back tomorrow with more great interviews and ahead-of-the-curve information you just can't get anywhere else.
CEO Money is sponsored by WF News 1 Incorporated. Views and opinions heard on CEO Money are not necessarily the opinion of this station or its management. Material on this program is intended for general information only and should not be taken as specific investment, tax, or legal advice.